Hi everyone. People are still joining us, but in the interest of time, we're going to get things started. So, hello and welcome to this webinar on the recently published exposure draft of the new Charities SORP. I'm Tristan Blythe and I'm editor of Charity Finance magazine. Before we actually get started, I just want to let you all know that this session is being recorded. So today we're going to discuss some of the proposed additions and changes the draft SORP contains. We do want this to be as interactive as possible, so there's going to be plenty of time at the end for your questions, so please use the Q&A function throughout the discussion, and I'll put as many as possible to the panel later on. Talking of the panel, I'm delighted to be joined by Jakina Matthews, who's Head of Finance at the MND Association, Fiona Condron, who's National Head of Charities at BDO, and Peter Hucker, who's CEO of Xledger UK. And also a big thank you to Peter and the Xledger team for supporting this event. We wouldn't be able to host it without them. Okay, so to set the scene and get things started, as you probably all know, the exposure draft is currently open for public consultation to the 20th of June. So now is the time that you can influence what the final version of the new SORP looks like. And that final version is expected to be published in the autumn of this year and effective from January 2026. I probably should also mention at this point that this is the first of two webinars we're planning. We're going to have a second one looking at the final version of the SORP once it's published. But for now, we've only got the draft version to look at. Now, one of the most prominent changes in that draft version is the introduction of a three-tiered reporting system. So you have tier 1 for charities with gross income of not more than 500,000, tier 2 for those with gross income above that, but not more than 15 million, and finally tier 3 for charities with income above 15 million. As you move up through those tiers, there's additional requirements. So now, to bring in the panel, if I can come to Peter first. Obviously, Xledger worked with a range of charities of different sizes and different needs. I just wondered what your thoughts on the tier system were. Do you think it's a good step? Okay, my apologies. We do seem to have lost Peter. I'm sure he would be doing the best to rejoin us. But in the meantime, perhaps, Fiona, can I come to you to sort of give your thoughts on the tier system first?
Yeah, of course. Thanks, Tris. So yeah, as you say, it's really interesting that we now have the ability to think about the size of charity and how its reporting should be applied. And what's interesting is there's no micro entity option. So for those very, very small charities, there's still quite a big chunk of stuff in the front part that they will need to comply with. Interestingly, the majority of this tiering is really related to the trustee report itself, not the main financial statements, other than an opportunity for smaller charities to apply what they call natural reporting for their expenditure. So that's going to be quite interesting. The natural classification. It doesn't preclude smaller charities from disclosing other aspects that they want to. I'm interested in the decision to base it on income, because we know that there are quite a few asset-based charities that have a lot of size and scale and influence who may well choose to do more than is set out in based on the income ranges. And the cash flow statement is also particularly interesting because of the interaction between other regulations and whether you do or don't have to do one. The final thing I'll say before I hand back to Peter is just that what the SORP at the moment doesn't clarify is what happens if you move from one tier to another over a couple of years, and how you'll adapt and restate as necessary. But shall I hand back to Peter?
Yes, thank you, Fiona. And yeah, Peter is back on the line. So Peter, we're talking about the tiered system. So just wondering.
Yes, I could hear you guys. Just the audio wasn't working. So thank you, and I think Fiona's already put it far more eloquently than I could. I mean, all I would say from my perspective is I work in a voluntary capacity as a treasurer for a very small company, and through working, with Xledger, we work with tier 2 and sort of tier 3 charities, and we do see a big sort of breadth in complexity, resources. So broadly, I'm in favour of it. I think it's a good thing, and in terms of the income threshold at recommended at £50 million currently, I mean that feels about right to me. We sort of have an internal measure of complexity when we're engaging with customers, and we always have that around the sort of 10 million income level. So from my perspective, it kind of feels about right.
Okay, brilliant. Thank you, Peter. So Jakina, just wondering, do you support the tier system as well?
In general, I generally approve of it and think it is the right thing to do in the right direction. Perhaps question the income levels, perhaps the difference or the movement between tier 2 and tier 3 and the level at which it crosses over. Perhaps tier 3 should be more aligned with the levels of income and perhaps headcount that would align with the SME charity versus the large charity. I think that would make more sense. Again, aligning this whole reporting and changes to the SORP is to bring us all in line, make us all kind of consistent in what we do, how we report, to give more confidence to the wider world that charities are actually doing things right, especially when we've had a couple of bad apples fall from the tree, which hasn't given the charity, the NFP world any good news readings. But based on what it is, the fact that they're giving us examples and directions of and sort of hints and tips as to what we should change and how the report should look, etc. And the tier system, actually, you can flow it through, and it's visible in a lot of the changes as well, which again would help those new NFPs that are coming on board as to, well, what do we put? Where do we write it? Those of us who have been around for a while, a lot of our reporting, a lot of the way we manage our transactions through our systems, if we're larger than 15 million, we're probably complying with about 60 to 70% of what they want already anyway. So again, this really is affirming, yes, we are doing it in the right way. So I do support it in general, just perhaps not the thresholds that they've put in.
Okay, brilliant. Thank you. So moving on, one area where that tiered system is evident is the proposed new requirements around sustainability. So here, tier 3 charities, so the largest, must explain how they're responding to managing ESG matters, where charities in tiers 1 and 2 are encouraged to do that. So if I can come to you first, Peter, on this one, do you welcome that encouragement on sustainability reporting?
I think broadly, yes. I mean, I would say that, if we compare charity reporting to, a for-profit organisation, then, charity reporting is less about how efficiently an organisation generates income and more about assessing the impact that income has on society. So, broadly speaking, ESG, aligns with those goals. I think if an organisation can demonstrate its environmental credentials, its strong governance, ethical standing, that can only be a positive thing. There is a work involved in getting this done, so I can understand why they're aiming this at sort of tier 3 charities. And I think the sort of biggest risk is if it becomes a checkbox exercise. I think if you're going to do ESG authentically, it's about getting, the senior stakeholders involved in what is important to our charity and why, and how we're going to measure it and hit our objectives, and making sure that it's really meaningful. I think ESG is important, and I think if we sort of look back over the last 10 years, we have, unfortunately seen some charities receiving, negative publicity from, poor governance, greenwashing, things like that. And, those things do remain in the public consciousness, and undoubtedly does have a, an impact on that those charities and their core mission.
Okay, thanks, Peter. Jakina, just wonder what your thoughts on sustainability are, and perhaps what you're doing at the moment, how it might change.
So at the moment, our general feeling is it's a bit like the Wild West out there with the various ESG companies that are offering, we could do this, we'll help you, this is what you need to monitor. And I agree with Peter, there is a lot of greenwashing going on out there. A little bit disappointed that they haven't stipulated the specific measures that they want us to measure. I know we don't have that in the commercial world, but again, a little bit more guidance on exactly what they feel would be pertinent for us to report on. From my own charity perspective, we're working closely at the moment with all departments, and obviously with the relevant health and safety and our people dealing with the ESG. We are looking mainly at things like our vehicles, the stock items, transportation, the usual sort of stuff that people would do. We're mainly looking in the scope 1 and 2 we've done. And it's scope 3, which is the supplier end, and trying to control that side of things. Again, that's very difficult. Although they may say things, it's very difficult for us to then say, hey, we're doing this, and then perhaps fall foul because the supplier hasn't done stuff. So I think it's more a behavioural change. Again, I agree with Peter. And the governance area is actually a larger beast. If a not-for-profit hasn't been doing the reporting on the ESG already, I think there's a substantial amount of work that they'll have to do to actually add it into their reports at year end. Again, with some of the stuff that we report on is unverified, so we're looking to build more trends in, and then once we've got the historical trends and analysis and comparisons can be made, then I feel that we could tighten up and add more. But as long as obviously they are a little bit lenient with how much we report initially in the first year and then expand on it year on year, I think that'll be a better route for them to go down. Perhaps I don't know what Fiona's thoughts are on it, obviously from an audit perspective. I mean, what's your sort of thoughts on it?
Thanks, Jakina. Yeah, I mean, I think it's definitely the right thing to do where it's relevant for that particular charity. Obviously, if you're a charitable company of a certain size, you're already mandated to do the SECR reporting. What I found interesting in the exposure draft is there's nothing equivalent to what very, very large corporates are doing by way of enhanced disclosures and something which we call TCFD. There may have been a missed opportunity there to align, those extremely large charities with the same sort of corporate requirements in that regard. But interestingly, we've spent a bit of time talking about this area, but there's actually less than a page in the exposure draft referencing this. So, it's not proportionately the biggest area. I think it's got to be the right thing to do. Those that want to embrace it, I'm sure, will do a brilliant job. Like Peter, I'm slightly nervous that it could become a tick box exercise, particularly if there's cost and time involved in gathering and monitoring information. And the final thing I'd say is throughout the SORP, what I find quite curious is the use of language between must and then should. So this is a must for tier 3, but then it talks about what they should do or could do. And I think that, again, is likely to cause some ambiguity around what the actual requirements will look like.
Okay, thank you. Moving on to another topic, as we've got a lot to get through, but in a way a slightly linked one, you could say, which is impact reporting, which is another area where tier 2 and 3 charities have more work to do. So the draft says that all charities across all 3 tiers must demonstrate how their work benefits society as a whole, whereas those larger ones in tiers 2 and 3 must provide more detail on actual impact reporting. So Fiona, if I can come to you first on this one, what are your thoughts on that and how it's going to change things in the sector?
Yeah, thank you, Tris. So impact reporting has always been a very complex area because of the variability of different charities and what impact means. And so however the SORP evolves, it's going to be difficult to have a one size fits all. Our experience as auditors is that there's still a challenge around outputs and impact. So it can be quite easy to tell lots and lots of stories. And in fact, many charities do use quite a lot of those stories in their accounts. What we're also keen on, and it is embedded in the exposure draft, is to ensure that charities are talking about things that have gone well and things that have not gone so well, because I think that's about being fair and transparent about how you've innovated and tried new things. What I find quite interesting as well is demonstrating impact is relevant when it's really alive at the time, but obviously with statutory accounts you're looking at things that are kind of very much historic. So I've seen increasingly clients using their websites or other forms of media to tell stakeholders about their impact, and I still see that that's a good way of ensuring that the most relevant and up-to-date stories are shared rather than them being embedded in a set of statutory accounts. So I still think we're going to see lots of variability. I hope we'll see a reduction in the number of reports that extend beyond 100 pages, but inevitably there will be a lot of variability still, but it's got to be the right thing. Charities exist for their beneficiaries to demonstrate the great work that they do, so the more we can encourage this, the better.
Okay, thanks, Fiona. Perhaps, Jakina, if I can come to you, sort of find out maybe what you're doing at the moment, how it will change because of this, if at all.
So I completely agree with Fiona. I believe that it definitely is required. I don't think we should get rid of impact reporting. It should definitely remain. The only thing is we've got to ensure that you're measuring the right thing in line with what your existence as an NFP is. And you are showing the most appropriate and obviously in a concise manner. It's key for the wider stakeholders, the wider group that you represent or support, are aware of what you're doing. And again, it makes it clearer and it gives more confidence to the charity sector. So no, I'm full support of impact. We, luckily or unluckily, have quite a detailed impact report where we cover off the various elements internally, externally, our base that we support, etc. So I think I'm just waiting for the final version to see if there's a few tweaks that we need to add on. Do we need to change certain wording, elaborate on some areas, put more detail in some things? But I don't believe any of the changes will be made internally. Everything is checked by the relevant committees, and it's all reviewed and signed off by board. So again, nothing is published without everybody who's involved or linked or want to showcase anything hasn't been consulted. So I'm fairly confident there's not as much for us or the charity that I work for that is required on the impact reporting, but nevertheless still waiting to see, just in case. You just never know.
Brilliant, thank you. And Peter, I wonder if you've got any comments you want to jump in on this one at all.
I think it's all been said well. I think Fiona and Jakina made some really interesting points on too much can actually be unhelpful in the end, and I agree with that. Impact reporting is important, though. I think as accountants, we know that financial information can only ever tell part of the story, and it's important to have the qualitative story told with it. Yeah.
Okay, brilliant. Thank you, guys. So another topic that's covered is legacies. And during the engagement period, the question of how legacies are recognised and the fact there are different approaches taken across the charity sector was raised. Now, the new draft doesn't mandate a standard approach. It does introduce a requirement for tier 2 and 3 charities to provide a narrative explanation of how legacies are recognised in the accounts. Jakina, maybe I can come to you first on this one. Do you think that goes far enough? Do you think it's going to improve things?
Not convinced yet. I'm on the fence on this one. When they make comments when you read it, and it says, you recognise it when the legacy is probable. Again, this is leaving it as subjective. When is it probable? Is it probable when you've been notified by the will, or is it when you get probate? When is it that you exactly want us to recognise it? So I think that is could cause some differences and confusion. I would have liked it if they gave us a definitive, you must do it at this point, or this is when it becomes realistic. I think we just need to, as an organisation, ensure that you have the right legacy recognition policy in place. You've agreed it. You utilise the policy across all your legacies. You don't pick and choose. The fact that we have to report a bit more information, well, we've got it, so I don't see why we couldn't, as long as we don't have to disclose anything that we deem as confidential or that we wouldn't want to disclose. I've got no issue. If we've got to give more information, we'll give it. But just think that they've been, again, a little bit loose, not quite directive on what changes and how they want us to report differences. So again, waiting to see what the final version of that is, and then we will decide as a not-for-profit which method we'll use and what direction we go in.
Okay, thank you. Fiona, if I come to you next on this one, what your thoughts are on this element?
Yeah, I mean, I've read through the detail. I do agree with Jakina that whilst they are trying to get to a point of harmonisation and consistency, I'm not sure it's quite achieved that. What has been dropped from the exposure draft is reference to entitlements. We used to have recognition at the point of entitlement, measurement and probability, and now it's just measurement and probability. They've tried to deal with the nuances of what happens in Scotland where there isn't a probate system, to explain that probate isn't always the only point at which you've reached entitlement. So I still think it's going to be interesting to see the clarity of the accounting policies that are adopted. One slight tangential point which I've picked up is that where charities receive legacies but have to go through the ex gratia route occasionally to make refunds of those, there is now a requirement to individually identify ex gratia payments. So if you've got a huge legacy portfolio, that in itself could result in quite a lot of additional disclosure. So I'm not sure that was an unintended or an intended consequence of how they've drafted things, but for those charities that have a lot of legacies, that could be unhelpful. But yeah, we'll feed back our comments on that, certainly as part of the consultation, because as auditors, it's really what we get challenged on a lot is, well, what do you see other people doing and what's right and what's wrong? And it's varying degrees of grey, I would say.
Thanks, Fiona. Again, Peter, I don't know if you want to.
Yeah, I think all I'd say at this point is we'll be watching it quite carefully in terms of the reporting clients, just to make sure that we can assist our clients on reporting with this as easy as possible. You know, I wonder sort of as well whether or not there's going to be a piece around making sure that you've got all the documentation in place to justify why you're recognising things at certain points. You know, I think that's, you might make a decision at the time, but when you do come around to the audit, you've got to be able to justify why you did the thing that you did. So, you know, I think just from a practical perspective, we'll be sort of recommending to our clients that they're holding all of that documentation in the system alongside the transaction that they're posting, just for ease to go back later. But yeah, certainly one that we'll keep under review.
Okay, fabulous, thank you. Now, obviously, a lot of this stuff we're talking about are proposed changes to the SORP. The SORP itself interprets the FRS 102 for the charity sector, and it can't change what is required by FRS 102, which is obviously the underlying accountancy standards. Now, that in itself has been updated. So we do know that some of the changes will definitely be taking place regardless of the consultation, and charities are being encouraged to prepare for them now. Namely around the recognition of some income and lease accounting in particular. Fiona, can I put you on the spot and ask you to give us a brief overview of what those changes are going to be that people are preparing for?
Yeah, thanks, Tris. So tackling those two big areas. So leases, typically operating leases, will now be on balance sheet as a right of use asset and a liability. So when the FRS 102 came out, obviously that was something we focused on, and how would that apply in the charity sector, particularly where you have unusual circumstances where leases may be gifted, or there may be huge discounts, peppercorn rents, etc. So it is great to see that the SORP has tackled some of those nuances for specifically for charities. So I think that will be some really helpful guidance for people to think about now in the circumstances of their own lease arrangements. So like you said, my strong encouragement is to pull out all those agreements and spend a little bit of time looking at where you've got less than market value, what the consequences will be. There is this reference to sort of social leases, which is quite helpful. Where leases will fall under the requirements to be recognised as right of use assets, what we have noted is that it's about the value of the item in its absolute terms, not by reference to materiality of the entity. So the same asset that is recognised as the same lease that's recognised as an asset would be the same for a very small charity and a very large charity. So once you've got your head around what's going to be required, you're going to need to do the same for every for every asset. In income recognition, yes, we've got this 5-step model, and this only applies to contract income. I still think there's a bit of ambiguity about performance-related grants and whether they're non-exchange or exchange and where they fall. So I myself are going to get into a bit more of the detail of that one to try and unravel it. So there may be some contract income recognition differences, but there will be a piece of work for entities to perform to actually check that there is, whether there is or isn't any differences, looking at each of the 5 steps that are set out. So, I mean, those are the 2 key areas, and as soon as people can find the time to start gathering information, I think that's going to be the hardest bit, and to work through that. But I think the SORP exposure draft has done a good job of trying to help the sector interpret what those complicated requirements are in the specific situations that they will more likely find themselves.
Yeah, and Jakina, do you agree that it's done a good job on that, and how are you actually preparing for it at the moment?
Yes, I do agree. I mean, as a draft, I mean, it's not often that you would get as much detail or as much sort of examples, nuances, etc. in a draft. It normally comes out in a final version when you get the full detail and go, oh wow, I didn't realise it was quite as big. So I do think they've given us a bit of a heads up. For me personally, we're starting a little project where we're going to pull out every single, from a lease point of view, every single lease contract that we've got to make an assessment, make a judgment of it, and actually prepare what we believe the position would be in as of the end of December, so that we are actually going to prepare 2 year-end reports, one that we will do and externally report statutory accounts, but we're also I'm already working with my financial controller to produce one in the new format, so that in effect we close this year with those balances, which we are, as far as I can interpret, we can just start next year when we report it as an opening balance adjustment on the balance sheet, in opposed to having to do the more detailed working. So yeah, we've got it on our radar. We're going to start going through that. We like to give ourselves about 4 or 5 months to work on that, get the various people involved that we need to. Likewise with revenue recognition, although we don't have many revenue contracts, there are some partnership agreements, etc., that we just want to make sure, is there anything in there that could possibly fall into this ruling? And then obviously sustainability is the other one that we're making sure that we've got ready. And we will be looking to our audit firm to give us some more guidance and some more advice come our internal audit around about the October time. And again, of course, we will be working closely, fluttering our eyelids as our finance system provider to ensure that they support us, to ensure that it is an all-off system workings and it's actually done within the system. Again, I think if we could get that going, then perhaps we've helped or gone 50% of the way to help other charities that perhaps use the same system. So anybody who can input, I think, is added benefit for the rest of us. But that's our plan of action, and fingers crossed that they don't change too much in the final version, so that I have to revisit everything again.
Well, I think I can say, as your system provider, we're more than happy to help you with this. But I completely agree with everything you're saying, Jakina. I think this is going to be a thing around being prepared. Depending on the operations of the charity, this could actually be quite a lot of work. Half of it in the the technical side of it. What do I do in each case? And part of it just in dragging all the documentation together. And depending on how much you already have that on hand, it could be quite painful.
Okay, thanks for all those comments. And obviously, there's a lot more we could talk about, but we are getting questions coming in, so I'm going to open it up to the Q&A now. Please do keep putting your questions as we'll get through as many of them as we can, whether it's about something we've already discussed or another element of the SORP. Please, give us those questions. Okay, so I'm going to start off with this one, which I'm going to put to Fiona. We've been asked, do the tier 3 limits also apply in Scotland? So just a little bit of clarification on that, please.
The short answer is yes. The SORP is a SORP for England, Wales and Scotland. Obviously, at the moment, Scotland does have slightly different criteria for when the SORP applies and when you can do independent examinations. But the bulk of what's in the exposure draft is equally relevant to Scottish charities. Yes.
Okay, brilliant. Thank you for that. And then we've got one on impact reporting, which asks whether you guys think there should be a prescribed methodology for impact reporting within the SORP, so impact reports can be easily comparable across the sector. Jakina, can I come to you on that one first? What your thoughts are?
I think I probably, again, would say yes and no. I think there are elements that, yes, are consistent and fall across all NFPs and that we all do and we all track, etc. But then if you recall what Fiona did actually say when she was talking about it, we do have our own specific nuances of things that each individual NFP is there for or what we're covering. So, yes, some of them I think we could be specifically directed. You must talk about X, Y, and Z, and then leave a second option of additional your specific NFPs items that you want to highlight. So I think yes and no is the kind of short answer on that one.
Okay, and Peter, Fiona, either of you two got a view on that?
Similar. I think there's two objectives are transparency and comparability, and charities do different things, so it can't be completely comparable. I think as Jakina says, if there are standard things that you can report on across all charities in terms of impact reporting, yes, we should, and it should be prescribed. It would be helpful.
Yeah, the only thing I was going to say is that I think if we could report comparably, we would. But the best brains in the UK have been scratching their head for quite some time, whether it's pro bono economics or other bodies that have looked at social return on investment and other metrics. And it's just always a difficult subject when it comes to comparability. Within subsectors, you could probably get to a point where you were comparing apples and apples. Yeah. But when you're looking at such a diverse range of organisations within a sector, what impact is for one organisation is very different from another. And I'm always really interested working with research or grant making charities where the impact of their work is often generational. So it's really difficult to articulate today what the impact of a research grant is when it's contributing towards a scientific endeavour in 10 years' time, 20 years' time, etc.
Okay, great, thank you. We've got another one here on impact reporting, but also on ESG reporting. It's probably one that I'll come to Fiona first, because it asks those two elements, ESG and impact reporting, will they be subject to review and verification by auditors, or will it just be for the trustees to satisfy themselves about the accuracy of those reports? So, sounds like one for you.
Yeah. Review, yes. Verification and audit work, specifically, no. So our responsibilities on the front part of the report and accounts is to check for consistency and comparability, both with the back part of the accounts, but also other information we may have gathered through the course of our audit. So if we find blatant examples where a statement is made, but it's wholly inconsistent with everything else that we've seen or read about through the course of the audit, then we would certainly flag it. But the actual audit opinion itself doesn't extend to the trustees' report. It's a consistency type review, but we would expect the trustees to have ensured they are comfortable with the accuracy, completeness, and reliability of the information that they are putting in the public domain.
Okay, thanks. And just wondering, Peter or Jakina, you've got any thoughts on, perhaps how you'd get back in that trustee oversight? Or
I'm in Fiona's camp. Obviously, it's something that is reviewed by the trustees, and they are our ultimate gatekeepers to ensure that what we are doing, how we're performing, etc. So I think it is a responsibility that should remain with them and not something that the auditors should be all over. Have a look, review it, compare it, but not something that we're monitored, tracked, or would form part of the AFR or notes or anything like that. So yeah, no, I agree with Fiona's stance on it.
Okay. Okay, so sorry, just scanning through these questions. Got one here around leases. So will needing to capitalise leases decrease free reserves, as both the asset, a fixed asset, and the liability will need to be deducted from reserves to calculate free reserves? Or will there be scope to offset the two when calculating free reserves? Who wants to jump in that? I'm afraid, Fiona, it's probably coming to you again as a start.
That's fine. That's fine. I'm ready for this one, actually, because one topic we've not touched on yet is the enhanced area of reserves reporting, which is set out in the exposure draft, and we were really pleased to see that a lot of that has moved from shoulds to musts, because clearly it has got to be the right thing to do for charities to have a consistent view of their reserves models, etc. But yes, this is a really brilliant point to raise, is that once you've worked out what your debits and credits are going to be for your leases, you need to think about a number of different factors. So it could impact on any loan covenants, for example, if they are based on asset measures. The asset and liability won't always be identical, because there'll be an unwinding element of the liability that sits on your balance sheet, offsetting the sort of depreciation on the asset. So my reading of the reserves policy wording in the exposure draft does make it clear, in the same way as if you'd have had a mortgage on a fixed asset in the past, you would have deducted the fixed asset and the loan. In this situation where you've got offsetting assets and liabilities, you will make adjustments accordingly. So there could be some elements of this change in accounting which will impact on other things that you need to think about, whether it be loan covenants or reserves reporting. But in general, the elements of asset and liability will form part of that free reserves calculation.
Okay, thank you. Move on to another question on this. The other panelist wants to jump in on that. There's a question here around the wording of must versus should, and whether we'll discuss some charity reporting on the shoulds, if there's a time or cost to getting that information. Perhaps, Peter, if I come to you on that, do you think that charities will just do what they have to do essentially and not do the sort of nice to haves?
I think it depends. I think with the shoulds, it's whether or not they see value in doing so. That there is a cost to creating all of these things. That there can be value in the reporting of them, but I suspect it will depend on the scenario of the charity. If you're tight on resources, you may just choose to stick to the musts, and I guess that's why the shoulds are there. It's recommended, it would be helpful, but not legislative.
Okay, brilliant. Thank you, Peter. Jakina, do you have any thoughts on that? Would it discourage you from doing something if it was just a should requirement?
No, I think it would just depend on capacity. I think that all bodies should be pragmatic about this, and obviously year one, year two, maybe those who, the tier ones and the tier twos, or even some transitioning to tier three, need to get their heads around what they're doing. Have they done it right? Gone through their first audit with the new processes and the new rules implemented. And then once they feel comfortable and feel they've got that nailed, I think then they can elaborate and add more of the shoulds in as like an enhancement to it, and selling or telling a better story or whatever it might be that those shoulds would enhance. So as long as everybody's pragmatic and they do it over a succession of years, and it isn't, and you're not negatively impacted if you don't have the opportunity or the capacity to add the shoulds in, that there is no detrimental impact to said not-for-profit.
I think that's a really good point, Jakina. Often with these things, and we see it on the client side, there's a one-off cost in setting them up. But really, once you have set up that reporting, certainly if it's in system, it should flow out quite nicely, just without anything extra. But it's getting your head around it in the first place, getting those things set up, which is the one-time bit, really.
Yeah, and if I can just quickly add, I mean, the shoulds are described as being things that should enhance financial reporting. So wearing my auditor hat, I will always ask the question of why would you not want to do this? And sometimes it is just a confidence issue around understanding what the requirement is. And once people realise that it's not as difficult as they might have initially thought, then you can kind of get them to think about that transition. But the SORP is clear: if you don't apply something that's a should, it won't result in a qualification or anything. You're not then at risk of saying, well, you haven't complied with the SORP, and that's really important.
Okay, thank you. So we're just going through these questions. There's two that I'm going to put together because they are the same question from a different angle. So it will make sense when I ask the questions. So it's around leases and the types of properties that will be considered a lease under the new rules. So one question is, would an HMO, which I think is a house or home of multiple occupancy property for a homeless charity, be considered an operating lease under the rules? And the other one, if I can just find it again, asks, would a license to occupy be considered a lease for the purposes of the new rules? That's an HMO property and a license to occupy. Fiona, I think that's probably one for you to tackle.
Yeah, on the license point, I think I'm going to sit on the fence on that one, because I think it depends in terms of what the terms and conditions of that license will look like. On the HMO property, I think if there are normal lease agreements attached to that, then, and there's nothing that would suggest that it's a social lease, which is defined in the SORP, then I think that will be classified as a lease that then needs to go on the balance sheet.
Okay, brilliant. Thank you. I think that covers that nicely. So, yep, sorry, just wading through. We've got quite a few to get through. So here's one on are the requirements, and this is something we've not really touched on, so it's good to bring it up. Are the requirements around assessing future viability more rigorous than previously? Perhaps, Jakina, can I come to you first and see your thoughts on that element?
Sorry, could you just repeat the first part? You broke up a little bit there, Tristan. Apologies.
What are the requirements around assessing future viability more rigorous than they were previously?
It's a difficult one because it depends on what you, as the NFP, were reporting previously. So again, it depends on how much more you have to do, and are they tightening in the areas where there perhaps were challenges or something that the FRC wanted to get more control over or show more control over. From my situation in my current the charity that I work for, it's not something that we would have to consider, because I think we do report a lot. We follow a lot of the rules already, so it's not something that I think I'm going to come across. But I don't think they're making it any more difficult. I don't think they're asking too much extra above and beyond raising our profile as not-for-profits to the wider populace. I'm a complete advocate for what they're doing. So in the way they do it, maybe not quite, but definitely agree with doing it.
Yeah, I mean, interestingly, the word viability doesn't appear in the SORP exposure draft at all, and I think perhaps the question has come from the perspective of those that are involved in large listed businesses. They're familiar with the idea that there's a going concern statement and a viability statement, and we have seen changes in the going concern auditing standards over the last few years, which encourage us as auditors to challenge organisations to demonstrate how they are going to continue to as a going concern for at least 12 months. And by that we mean, from a viability perspective, if it looks like you're going to run out of cash in month 13, then that would cause an issue. So it's an interesting question in the context of heading into a continuing to operate in periods of uncertainty with cost pressures and income pressures, that we always advocate for charities to have a cash flow model that they can regularly update, and it's not part of a year-end process. And obviously the SORP is looking at what your reporting obligations are at the end of the year. Viability and going concern is something that charity trustees and organisations should be capable of measuring at any point in time. And I'm sure organisations like Xledger and the way in which their modules will support in cash flow forecasting as well will be really, really important.
It's interesting, actually. Of course, it's incredibly important, and I think, in the SORP it sort of says, charities should be doing this anyway, and they should be. I mean, from my perspective, we have for-profit organisations and not-for-profit organisations, and everyone is interested in cash flow. But I would say in particular, charities are interested in understanding their cash flow, and also continuously reforecasting, because I think a lot of charities are sort of saying, well, what happens if this bit of income doesn't come in and this doesn't come in, and how am I going to think about my expenditure in relation to that? So it's a big focus for charities and needs to be.
Okay, thank you. So there's a question here which perhaps it's on, again, a different topic that we haven't covered, which is around investments, and whether the SORP should require disclosure of who your investment advisor, investment manager or managers are in line with the CC14 guidance, or do you think the relevant experience and professional qualification of whoever's in the investment advice should be stated? Fiona, do you have a view on whether that's something that should be disclosed?
Yeah, so the SORP already continues to have a requirement for principal advisors to be disclosed. Obviously, there are some extremely large grant-making charities who will have multiple investment managers who may determine that some are principal and some are not, but that requirement exists, and so therefore it is already aligned with the requirements of CC14.
Okay, and you mentioned the large grant-making organisations. There's actually a question relating to those types of organisations, which is, what do you see as the key changes for grant-making charitable organisations in this new SORP? Is that something that you think there's anything particularly different for them as opposed to the rest of the sector?
There's one thing around, obviously some grant-making organisations grant by way of social investment loans rather than just pure grants. So one area that the SORP has sought to clarify now is, well, they've removed the reference to programme related investments and mixed motive investments. So we only have one form of social investments, and now there's clarity that gains and losses will always just go through the gains and losses line rather than as part of charitable expenditure. So that's something that, you know, the very, very large grant making organisations who are doing sort of innovative ways of making grants will need to consider whether there's any change to their identification of what is a programme related investment, what's a social investment. I can't think of anything else directly for grant making organisations. I haven't seen anything so far that has given me cause for concern in that's triggered a thought in that particular subsector of charities.
Okay, brilliant. Thank you for that. And this is perhaps a good one to kind of pose towards the end of the session, so I'm going to put it now, which is, do you think that the new SORP framework will encourage charities to innovate and take calculated risks, or will it further entrench risk aversion through overly cautious compliance expectations in reporting? It's quite a one to take on. Jakina, can I come to you first there? What are your views? Will it inspire that calculated risk taking?
I don't know whether whether it's gonna impact either way. I believe that any not-for-profit out there that is very cautious and very prudent will continue to behave in that fashion. I don't think the SORP is going to change that. Those that are a little bit more risque and willing to extend might make them think twice. But again, I don't think that the changes that they're implementing through the SORP would dissuade that sort of risk taking or being risk averse. I don't think it will have that sort of impact. It's down to those who are leading and managing said not-for-profits, and I think it's the individual that drives that, in opposed to the physical charity being known as a risk charity or one that's more prudent. Personal opinion. But of course, Fiona, come on, tell me. Am I not being personal?
No, not at all. I was just curious because there was one particular paragraph that caught my attention to do with costs of raising funds, and there's now a requirement. And apologies for sort of looking across because I'm literally trying to remember the exact phrase now, but it's if you've got material expenditure applied to raising funds, the report must explain the effect this expenditure has had and is intended to have on the return from fundraising activities for the reporting period and the future periods. When I read that, I thought that's quite onerous because it's almost getting to that hub of, is a pound spent on fundraising a good pound, and is it a good pound now or is it a good pound in the future? And we all know how notoriously difficult it is to match the fundraising expense of today with the income of today, because that's just not how life works. And I'm slightly nervous that this will make charities feel less inclined to talk about some of the areas where they're innovating and taking risks, because you have to take risks in fundraising to try new things, etc. So that particularly caught my eye as a way of thinking, is that actually going to discourage people from talking about how they are innovating in particularly in the area of fundraising?
Yeah, it's a really interesting point, actually. You know, sort of in the commercial world, if someone takes a risk and it doesn't, work out, well, that's what it is. But if you're spending charities' money and it doesn't work out, then that has a bit of a different feeling to it, doesn't it? And yeah, I think you're right, Fiona. It could do if used the wrong way. You have to be careful of that. I guess some of it is about understanding what was intended by that statement. What are they trying to do? And I think if we get a better understanding of that, it might be clearer when it's applied and when it shouldn't be.
Okay, great. We've probably got time for one more question before we have to wrap things up. And one's come in that I think actually is a good way to sort of end the discussion. Go around the three of you and ask, is there anything you were hoping to see or to have changed in this version of the SORP that hasn't been included? So are there any missed opportunities, essentially? So perhaps, Jakina, if I can come to you first on that one.
I think they're changing enough and giving enough as a challenge. Come on, how many changes do you want them to make? I mean, obviously, there's always going to be something that somebody or a charity or an NFP could sit there and go, oh, I wish they'd done this, or oh, they should have. I mean, my only takeaway from it is being more definitive in what they want us to do, leaving that little woolly subjective elements that we've got. That's the bit that I'm a little bit disappointed by. Giving us clear, defined direction of exactly what they want and what they want to change is what I was really, really hoping for. These changes are enough, as I think I started at the first. Let them do this in tranches. They can revisit it again, maybe in a year, 2 years, 3 years' time, and then look at the next section. But bit at a time. If they'd have done any more, I think we would have all self-combusted, and it would have been too much for a lot of us to do. So, no, I think leave it as it is and revisit it in a couple of years and make some more tweakments in a few years' time is my take from it.
Okay. Peter, do you have any views on that, whether that was something you expected?
I completely take Jakina's point on there. There's only so much you want to do in one place. I mean, I think with all these things, there's always room for improvement, right? I think the point from earlier was worked examples are really helpful. And I think in all these sort of, from my perspective, all these consultation periods, it's good to understand the wording, but a worked example is always really nice. So if I was going to say anything to the creators for next time, the more of that, the better, to be honest, because it just puts us all on the same page of where we're going. And the more transparent with what we think these things are, the better in us being able to provide feedback.
Okay, super. And so, Fiona, your thoughts?
Yeah, stating the obvious, we live in a very complicated world, and regulation is getting ever more complex. So I think the thing that's been perhaps overlooked in a sector where we've got 170,000 organisations, many of whom are what we would ordinarily describe as sort of micro entities, is I think the SORP doesn't remove the requirement for some of the stuff which is even very onerous for very, very small organisations. So we used to have the frizzy SORP, and that kind of was removed. So I think perhaps maybe it goes right back to your very first question about the tiering, Tris, that perhaps there was an opportunity to lighten the load for the very smallest charities who are doing great work but don't have the resources and time to wade through 300 pages of a SORP and work out what they need to do. And then the other thing which is quite interesting is, you've got FRS 102, which, as you said as part of your introduction, cannot change, and there are so many references to you can go so far in the SORP and then you need to reference back to FRS 102. So I can see a lot of head scratching of people sitting with a 300-page version of the SORP and almost an equal number of pages for the FRS 102, and sort of flicking between the two to try and fathom out what they need to do where. So I think in a world of complexity, it would have been nice to have created some areas of simplicity and cutting back for some organisations, but we'll certainly be using our voice as part of the consultation period to think about all ends of the spectrum of the sector and what good could look like.
Okay, brilliant. Thank you to all three of you for that. But I am afraid to say that we're rapidly running out of time. So I just want to say thank you to everyone for attending, taking part in all your questions. If we haven't had time to answer your question, because there are still more that we could go through, please do email us at events@civilsociety.co.uk. That's events@civilsociety.co.uk. We'll pass those questions on to the panellists, and they will get back to you. If you still want that question answered, please do that. But all that's really left for me to say is a big thank you to Jakina, Fiona and Peter for their comments and insights today. And once again, thanks to Peter and Xledger for supporting the webinar. And I hope to see many of you again at our second webinar I mentioned at the start, and we'll have more details for that as soon as the final version of the SORP is released later in the year. But in the meantime, I hope you enjoy the long weekend ahead. And yeah, thank you all again, and goodbye for now.